Hey, Jeff Carlisi here from 38 Special, and we're rocking it up right here with Traders Nation.
Welcome back. You are tuned in to Traders Nation. My pleasure to have with us back once again Eddie Ghabour, co-owner of Key Advisors Group, plus book author of a brand new book. Look at this. Check this out. The Common Sense Bull, the keys to the good life before and during retirement. Eddie, welcome to Traders Nation. How are you today?
I'm doing great. Thank you so much for having me.
Sure. Always a pleasure, Eddie. Always a pleasure. So, Eddie, Americans, they know they need to save for retirement, but they find it difficult to do so. Why is that?
One of the biggest things when we do research on this and the psychology behind investing and why people know they should be doing certain things and they don't, I think it can come down to a couple of things. Number one is debt management. In today's society of keeping up with the Joneses, and I call it the Amazon effect, where anything you want to buy, you just click of a button, it's on your doorstep the next day, that we find that the younger generation today does not spend any time on building a plan. And in the book, I kind of go through the fundamental steps that someone early on should really focus on in regards to spending time on themselves versus so much time on other things. It's just amazing when I hear that people don't spend time putting together a strategy for them to be financially independent like my clients are.
Right. That instantly came to mind right before the housing crash and the economy crash of the Great Recession way back when. It comes to mind that people were using their houses as ATM machines, man. Like they were just tapping into their house to spend. And so it's not necessarily that they don't know how to save, it's that they know too well how to spend money they really don't have sometimes. Eddie, your thoughts?
You're exactly right. I think the biggest key to success financially is debt management, and too many people don't. And what we're seeing now, because we've seen a boom in the markets over the last 10 years, you're starting to see a lot of bad habits happening again. After the financial crisis, when people really got hurt financially, you had a certain group of them that started to tighten the belt a little bit and become more focused because things were hard.
Sure.
And now that things have seemed to have loosened up economically, I'm seeing the same bad habits repeat itself. And that's why I think having a coach or someone that you can trust to hold you accountable, to keep you on track so you don't make irresponsible decisions financially is huge.
Yeah. When we came up to the Great Recession, we pounded the table here on Traders Nation for like a solid year, man. You need to get your financial house in order. And we pounded the table on that because, financial wealth is not only not having a lot of money in the bank. I mean, you can certainly have a lot of money in the bank. You find financial wealth there. But being debt-free or virtually debt-free, that's financial health too, isn't it?
100%. And, I have the luxury of working with really successful individuals that most of my clients are retired and are financially independent, but they don't have $10 million saved. What they do have is no debt. So when you don't have any debt, you don't need a tremendous amount of income coming in each month to live a really comfortable, happy, stress-free retirement.
Right.
There's a lot of misinformation. They need to have these piles and piles of money to reach financial success, and that's not accurate.
Right. And being virtually debt-free or debt-free, man, that equates to long-term stability. I mean, it really does. When you don't have somebody reaching in your pocket, you got long-term prospects there. So let's talk about, Americans say that they don't have enough to save for the future, and well, maybe some of them do, and some of them probably don't, but certainly, what are some of the ways that they can save, for instance, like found money, bonuses, when it comes to retirement plans? If they're working for a company, there's a bonus. It's like found money, right, Eddie? I mean, certainly, shouldn't they be putting that money away? It's not a part of income that they balance for every single paycheck, is it? It's found money.
Absolutely, and the problem is when there's found money, it's kind of like easy come, easy go. I don't want to say that it was easy to earn it, but once you get that found money, they don't save it. Right. And it's kind of like the individual that banks on a big tax return to spend that.
Yeah.
I'd rather you take that extra money each pay period and just automatically invest it, because I have found that is the best way to force someone to save and pay themselves first is just automatically have it deducted from their paycheck, because it's out of sight, out of mind.
Yeah, totally. Almost 8 in 10 Americans, and I'm going to put a stat out there, are putting away $250 in savings. They say that it was more rewarding to put that away than losing 5 pounds, but can't we do both?
I don't know why we can't have balance.
Right? Can't we do both? I mean, I would love to put $250 away and drop 5 pounds. Why not?
I know. And, here's the thing, too, and I think those people, when they change their mindset and start focusing on saving, it's actually very gratifying, and it becomes an addiction. So once you get started, that's the hardest part, is to actually get started. Because once you start to see that money pile up and you start to see what the future could potentially look like, it becomes addiction, and you want to be able to do more and more and more.
Yeah. Now, shouldn't we take like a certain amount of money? Let's say I look at my finances, I see what's coming in, I see what's going out, and then I say to myself, okay, I got an extra $100, I got an extra $500. Wouldn't I say to myself, you know what, I'm going to start saving, and maybe I'll put $100 away, and then if I don't feel any pain, I'll bump it up to $150 or whatever the amount may be, right? Is that a good way to go about doing that, to get started?
It is, and the other thing too, to your point, which I agree with, is each year many times people are getting pay raises.
Yeah.
And so I always encourage people to, you need to enjoy it as well too, but bump your savings up each year when you get a pay raise. Bump it up a little bit. Keep some for yourself for some extra income.
Sure.
But put more away so that way your savings is keeping up with inflation.
Yeah, that's right, in tandem with any bonuses that you may receive from your employer, certainly, right? So you got
That's
those pay
exactly
raises.
right.
Yeah, because we budget ourselves for that fiscal year. So we know what has to go out, so we get a pay raise. It totally makes sense to me. Take a percentage into savings, take a percentage to yourself so you feel good about it, because we need to have that. It's a great idea. What are the key ways of saving for retirement? And is it ever too late to start saving for retirement?
Obviously, if you're 80 years old, the answer is yes. But with life expectancy today, even someone who is, 45, 50 years old, they're expected to live another 30 to 40 years.
Yeah.
So it is not too late, depending on what stage you are in life.
Sure.
And I think that's sometimes what intimidates people, too, is they're like, oh, I'm 45 years old or I'm 50 and I'm not quite where I need to be, so they just kind of throw the towel in as if there's no hope.
Yeah.
And again, my goal with this book is the financial successes that I have been able to see our clients have, is I'm sharing that in a way that's easy to read and understand, so that way it's not too intimidating for someone, whether they're in retirement on how to generate income from their strategy, or whether they're not quite where they want to be yet, with some things they can do to try to get them to financial independence.
Yeah, so we're almost out of time. Is there something that we didn't discuss here today that people should know about that's in your book?
So risk management, especially this late cycle in the market. Okay, we are on a very long bull market run. I have been a bull, thankfully, for the last several years. But most people don't realize the risk they're taking in a portfolio. There's probably a lot of people out there that are listening right now that own bond mutual funds. I got a section in my book as to why maybe owning individual bonds would add an extra layer of protection versus just mutual funds.
I see. All right, so where can we get a copy of the Common Sense Bull, the keys to the good life before and during retirement, Eddie?
You can go and get it on Amazon or Barnes & Noble, and you can also visit my website at thecommonsensbull.com. And you can also follow me on Twitter. My Twitter handle is Common Sense Bull.
All right, awesome. Do you have any website tools over at your website that people can check out, information that they can get for free that they can use, read, and use?
Absolutely. And that website, to get a lot of that educational information, is KeyAdvisorsGroupLLC.com.
KeyAdvisorsGroupLLC.com. All right, so folks, listen, head out today, get a copy of the Common Sense Bull, the keys to the good life before and during retirement. Eddie, as always, we do appreciate your time right here on Traders Nation. Have yourself a good day.
You too. Thank you so much.
You're more than welcome. Okay, on the other side, we're going to come back to towers. Stay tuned. We'll be right back.
CI